Good morning, student. Namaskar, Suprabhat, Vadakkam, Sat Sri Akal, Kem Cho, etc., etc. So, today we will be discussing the provision of Chapter 9, that is Income Tax Liability, Computation, and Optimization. So, this is our last chapter of Income Tax Subject 3A. I am C. Ankit Sharma, your income tax faculty for the session. And in the last session, we have completed the provisions of income tax return filing and self-assessment. That was theoretical part and majority provision relating to procedure. But I believe that when you have gone through with that chapter and if you have revised it yesterday, then I believe that you have seen that there are multiple provision that is very, very important practically for your articleship life and also your day-to-day life, because there were date of filing of return, who is required to file of return compulsorily, the requirement of submission of PAN number, what is last date of filing of return, what is belated return, what is revised return, consequences for not filing return on due date, updated return is a very important provision from that. And today we will be completing, today and tomorrow we will be completing our chapter 9, and it is the summary of all topic. The good news is there is nothing new in this chapter, because in this chapter technically we are discussing all the provisions together, which is connected with basic concept, which is connected with residential status, which is including all five heads of income, whether it's house property, salary, PGBP, capital gain, other sources. Clubbing provisions are also there. So when there would be a single question in which all the provision has been included, that would be the question, which kind of question we will be discussing in this chapter. And let me tell you, in the examination also, there is descriptive question. Descriptive question number 1 is generally compulsory. And that is on the basis of chapter number 9 provision. So we will discuss a lot of provisions and we will revise some old provisions also. There are only two new topic in this chapter. One is AMT, alternate minimum tax. And the second one is optimization of salary structure. How to, you can say, make a salary structure to minimize your tax liability. So these two topics are new. Everything else we have already gone through in previous chapters. So one by one, we will discuss the steps how to calculate the income under this chapter. We will solve test your knowledge question, illustration, etc. So you will have a type of revision of all the previous chapters, whatever you have done in the last classes. Okay. So good morning, Kalinga. Good morning, Neeraj. Good morning, Ambika. Good morning, Shamli. Good morning, Dia. Good morning, Tiwari. Good morning, Shraddha. Good morning, Navneet. So I believe you must be studying very hard to achieve the goal of your life to become chartered accountant as soon as possible. And I know because due to regular classes, maybe you are not able to revise the topics what we are actually going through every day, but you can revise it later also. So let's get started with thought for the day. It says the more you sweat in practice, the less you bleed in battles. So, of course, we are not talking about the battle or a real technical, theoretical war. We are talking about the practice, what we are doing in daily life. So, in the examination or the examination duration, you will not feel bleed. That means you will not feel nervous. You will not feel uh, tense if you are practicing this time nicely. So the more hard work you will do in today's or tomorrow or before examination, the less you will have tension for your examination, the less nervousness you will have in your examination, and definitely you would be successful. So it's all about how much hard work you put right now in your studies. And if you'll hard work properly, if you'll work hard properly, if you practice, if you are revise your chapters properly in this duration, then in the examination time duration, you will be less nervous, you will be less tense, and definitely the result would be in your favor. So of course, the more you sweat in practice, the less you bleed in the battle. Moving on to the provisions, and you will see it's a kind of all the provisions we have already gone through in this chapter. So this is our income tax liability, computation, and optimization. Now, if we'll say in this chapter, in the examination, let me tell you a very interesting thing. In the examination, when you will have a question to calculate your tax, please be focused. What is the requirement of question? If a question is related to your tax liability, computation of total income and tax. So is there is a calculation of tax, please be focused. What is the requirement of question? In the exam, maybe there would be requirement to calculate tax as per default tax regime. If the question asks you to calculate tax according to default tax regime, then you only need to calculate tax and income as per default tax regime. There could be a situation when the question will be asking you to calculate tax as per optional tax regime or opting out from default tax regime. Then you only need to calculate tax as per optional tax regime. There could be a situation when they will ask you to calculate tax as per most beneficial, in most beneficial manner, or to minimize the tax liability, etc. So if the question asks you to calculate tax as per most beneficial or to minimize the assessee's tax liability, then we have to calculate our tax as per default tax regime also, then as per normal provision also. Under normal provision, you have to calculate tax as per optional tax regime, and there would be one more kind of calculation, tax as per AMT, alternate minimum tax. Now, what is AMT? How we need to calculate the tax? What is the requirement of AMT? That we will discuss in AMT topic in this chapter. But there would be a calculation of tax as per AMT also, if applicable. AMT is not applicable in all cases, but if the condition of calculation of AMT has been satisfied, then you have to calculate tax as per AMT also under normal provision of the Act. And the tax as per optional tax regime and the tax as per AMT, the higher would be tax under normal provision of the tax we have to consider, the higher of these two. After considering the higher of these two, then the tax as per default tax regime and the higher of these two, out of these two, tax as per default tax regime and the tax which is higher out of these two, the lower would be your final tax liability. Now you can see that would be a huge solution, a very lengthy solution, because in this case, you have to calculate your tax liability once as per default tax regime. Under normal provision, you have to calculate your tax under optional tax regime. And if AMT also applicable, then you have to calculate a tax as per AMT provision. Out of these two, the higher would be considered, and this higher value, and the tax as per default tax regime. Out of these two, the final would be lower would be your final tax liability. Okay. So please, whenever you are reading a question for calculation of your total tax, please read carefully what is the requirement. Either they will ask you to calculate only tax as per default tax regime, or they will ask you to calculate tax only as per optional tax regime or opting out of from default tax regime, or they could ask most beneficial to the assessee. And I believe this would be the case in the examination. The probability of asking question is most beneficial to the assessee. Got it? नवनीत इज आस्किंग सर मैं एग्जाम के लिए स्टडी प्लान बता दीजिए क्योंकि अभी लाइव क्लासेस की वजह से रिवीजन प्रॉपर तरीके से नहीं हो पा रहा है स्पेशली न्यूमेरिकल सब्जेक्ट्स सो इट्स बेटर दैट यू शुड आस्क दिस क्वेश्चन नीरज tomorrow would be our last class then you will remind me this provision then we will try to discuss this topic tomorrow. Okay. Arun Sagar is saying MAT for company. Yes, Arun, MAT is for company and MAT is not in our syllabus. It would be in final. So, other than company, AMT provision applicable. We will discuss the AMT provision in detail. Neeraj is saying mine is in September. Okay, good. So, moving on to the provisions. So, that's why this chart says computation of total income and tax payable. Gross total income, deductions, total income, tax as per normal provision, tax as per 115 BAC for individual HUF, AMT tax is there. So you can see how confusing this is. So we will sort this confusion. We will find out how to calculate tax in this confusing scenario. So you can see this chapter is going to revise all the old provision and you can see how to calculate your income tax. So first of all, the first thing is find out your residential status, whether you are a resident, non-resident, whether you are a resident, so it could be you are a resident and ordinary resident, it could be a resident or not ordinary resident, because this will affect your tax computation because a certain incomes need to be included in case of resident and not ordinary resident, and there are certain cases which is included income in case of non-resident. So initially you have to see in the question the first step that what is the residential status of that person. Then we have to calculate the incomes under various heads of income. We are having 5 heads of income. So in the question, there would be multiple kind of information regarding income available. Out of those or that information, you have to find it out which income should be taxed under which separate head, because on those income, we have to apply the separate head provision individually. Income under the head salary, house property, PGBP, capital gain, other sources. Fine. Compute income under each head, applying the charging and deeming provision and providing for permissible deduction exemption thereunder. So we are talking about the deduction and exemption which is connected to the specific or respective head of income. We are not talking about the deduction under section 8TC, etc. We are talking about the deduction which is available under that specific or respective head of income, like exemptions of HRA, exemption of conveyance allowance, etc. Deductions like standard deduction under salary 75,000, 50,000, income from house property 30% standard deduction, etc. So you need to apply the deduction respective head of income for which we are calculating heads of income separately. Then you have to apply the clubbing provision, if any. Then you have to apply the set of provision, if any. That would be my, after applying clubbing and set off, we will get our gross total income. Again, a very interesting and important fact to be remembered when you are solving these heads of income, that if it is under default tax regime, then which exemption, etc. are applicable, which are not applicable. And if you are under optional tax regime, then what would be the changes? For after calculation of gross total income, deductions would be there. Again, for the purpose of deduction also, you have to see whether I have to solve question as per default tax regime or as per optional tax regime. So who will tell me there are, I guess, three deductions under section 80C to 80U, which you can claim. So under default tax regime, can you tell me those three deductions you can claim under section 80C to 80U? Arun is saying 80CCD2, 80CCH2, 80JJAA. Navneet is saying handicapped transport. No, Navneet, handicapped transport is under salary head. We are asking deduction under section 80C to 80U, not regarding salary topic. Okay. So Arun has actually give the correct answer. Achitya also gave one deductions answer. So correct, there was NPS, employer contribution deduction allowed under both regime. That Agniveer Yojana deduction has been provided under both regime, and 80JJAA, that is for employment of new regular workmen scheme. So these three deduction is allowed only under section 80C to 80U, and other deductions are allowed if you are following optional tax regime. After that, you will be at your total income. Good morning, Rajiv also. Okay. So this is the process how you need to calculate your total income. And you can see we are not reading anything new. This we have discussed in chapter number 2. Then these respective chapter already we have gone through. Then after clubbing provision already discussed in the classes, set of provision discussed. After applying this, you will have at your GTI. Deductions provisions also has been discussed in the classes also. So there is no new topic yet under this chapter number 9. Meaning of total income, of course, we have already discussed that. Income to be considered while computing total income of individuals. So if an individual is required to file return under his personal capacity, then income from salary, house property, PGBP, capital gain, etc. need to be computed. If as a partner of a firm or LLP, then including these 5 heads of income, there would be some inflow of income. There could be some inflow of income from a partnership firm if you are a partner, etc. So in that case, there would be extra salary, bonus, income treatment, which we receive from the partnership firm. There could be treatment on interest on capital or loan if we are receiving it from a partnership firm. And we are also might be receiving profit from the partnership firm. That would also be need to be considered while calculating income of a partner, but that profit is going to be exempted. So these two are taxable up to a certain amount, and this is going to be exempted. So if suppose I am an individual only, then I have to consider only 5 heads of income, but I am an individual and I'm also a partner in any partnership firm. Then I might have income of salary, house property, etc. But the three treatment of income which will or may flow from a partnership firm also need to be treated. That would be salary, that would be interest, and that would be profit sharing from the firm. Out of these three, profit sharing is going to be exempted. If I am a member of HUF, then share of income of HUF could be a part that is going to be exempted. Income from an impartial estate of HUF is taxable in the hand of the holder of the estate who is eldest member of the HUF. Income from self-occupied property converted into joint family property without adequate consideration could also be the part of your income if you are filing your return as an HUF member. income of other person included in the income of the individual. So clubbing provisions we are discussing over here. So if you have transferred your asset to your spouse or minor child without adequate consideration, etc., or there could be cases when you transfer your asset without when you transfer your income without transfer asset. In that case, the income is going to be clubbed in your hand. So these could be kind of extra treatment what we need to do when we are calculating individuals' income tax liability. So nothing new is there, already discussed in respective chapters. Now the diagram what we have discussed above, like first step was residential status, then second was calculation of heads of income, etc. The diagram has been discussed by point number one by one in short way, that what you need to calculate, how you need to calculate, etc. Okay, I have asked you to calculate, I had asked you to revise the provision of basic concept, salary, capital gain and PGBP. So I believe that you must have gone through with the provision of basic concept, surcharge, etc. Because that is going to help a lot when we will solve the numerical of this chapter. So determination of residential status. So can anyone tell me what is the meaning of deemed resident? Anyone remember? Under section 6(1)(a). What is a deemed resident? Or when an individual could be regarded as deemed resident. I know I didn't ask you to revise the residential topic, but still I just want to know if any one of you remember right now, what is deemed resident? When an individual can become deemed resident? Neeraj is saying who has reside in India for 182 days. No, Neeraj, not correct answer. If anyone want to answer in I can unmute them. So if you are not able to write it, you can raise your hand. Okay, somebody has raised his hand. Harsh want to answer this. Yes, Harsh, please go ahead.
Good morning, sir.
Good morning.
Sir, if citizen of India reside outside India, come to visit or not India, having income more than 15 lakh from Indian resource and not pay tax outside India.
Perfect, perfect. Very good. Exactly. When an individual who is citizen in India and if he reside outside India, so whether he or she comes to visit in India in previous year or not does not matter. But if they are earning income from Indian sources exceeding 15 lakh rupees, and the very important point is not paying tax anywhere on that income, then they will be considered as deemed resident. Okay, now can anyone tell me if you are a deemed resident, then what would be your residential status? You would be a resident or ordinary resident, or you would be a resident or not ordinary resident. Correct? Very nice. So everyone is giving the correct answer. Harivan, Shamli, Navni, Jayendar, Arun Sagar. They will always be treated resident and not ordinary resident. Clear? Very good. So moving back to the notes. So deemed resident, whether you are the final thing which you need to find out in the residential status question, which would be the part of your total income question. It would be a small part of your total income question, whether he is a resident and ordinary resident, whether he is a resident or not ordinary resident, or whether he or she is a non-resident. So on the basis of this, you can decide which kind of income is going to be taxed in the respective individual. So the first thing, find out the residential status. Always remember, if the question is silent, always treat the individual or that person as resident or ordinary resident. So if the question is silent, you have to consider it as a resident and ordinary resident. Mr. Arun want to say something? Yes, Mr. Arun.
Sir, actually, I have a doubt. I thought deemed resident means okay, someone who is staying outside of India, but income they earn, but they didn't pay anything tax to any country. So that time only we going to consider that income as that person deemed resident.
He must be a citizen of India first.
Yes.
So, what is the doubt in this? You are absolutely
Sir,
correct.
actually, someone is explain if the income is earned in India, that time it directly they go into tax. If okay, as per my thought, if a income is earned outside India, but he is citizen of India, he didn't pay any tax because of some geographical conditions. So that reason we will consider as him as a deemed resident for the purpose of tax collection.
No, but the basic requirement is he would be treated as deemed resident, but he should have some income which is exceeding 15 lakh rupees, which he has earned from Indian resources. If he's only earning income from outside resources, then he would not be treated as deemed resident for the purpose of income tax. So if he or she is having income from Indian sources also on which there is no tax liability, the other income, whatever he is earning from outside India, if he is paying tax over there or not, does not matter. The income he is earning from India, if on that income he is not paying tax anywhere in the world, then he would be treated as deemed resident. We have example also, I guess the illustration number, I guess test your knowledge question number 2 we will discuss, in which there is a condition whatever you are asking. So that would be clear when we will solve that question.
Sir, but if you earn income in India, it is mandatory to pay income tax.
No, who is saying you not need to pay income tax if you have income in India?
Sir, actually, why this provision going to be applied? If I earn income, I definitely going to be taxable in the hand of everyone.
No, 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 no. It's not like that. If you are a non-resident, if you are a non-resident, then there are certain incomes which are going to be taxed if that income is fall under deemed to arise in India case. But if you are a deemed resident, in that case, any kind of income you earn from Indian sources, you have to pay tax if you fall in the definition of deemed resident. Now, suppose somebody is earning income which is from arising from India, but he reside outside India. Suppose he reside in UK, but he's receiving that income in UK. So maybe UK government also going to tax that income. Then he need not to pay tax in India because that would be double taxation.
Sir,
So
but
if
is representative going to pay tax?
no, 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 it's not mandatory. Why is representative going to pay tax? If I have already paid tax on any income outside India, then you need not to pay that
Double
tax in
taxation.
India because there would be double taxation. Let me tell you, there's a chapter, Double Taxation Avoidance Agreement, section 90, 91, 92, etc. That is going to be dealt at final level. So at intermediate level, we don't discuss about the double taxation, but the intention was government was that if that you are earning any income from Indian sources, and suppose whatever you are saying, if he needs to pay tax on those income also who is earning outside India, then why Indian government will collect tax on any income, whatever he is earning outside India, whether there is tax liability or not? In this situation, suppose somebody is residing in a tax holiday country. There are certain countries on which there is no tax structure is applicable. So if he is a deemed resident and he is earning income outside India from that country, so that means in that country he is not paying anything, but he needs to pay all the tax into Indian government. How it is possible? So Indian government can ask only tax on that income which is arises from Indian sources and on that income if he did not pay any tax outside India. If he already
Okay.
pay tax outside India and if we ask him to pay tax in India, that would be double taxation and that is not allowed in our country.
Sir, and you also explain one thing, okay, while doing the section, person from Indian origin something. What is that?
Look, we have discussed the meaning of person of Indian origin in chapter
Yes.
number 2. But for time being, let me tell you, if you or your parents or your grandparents, if any one of these person take birth or born in undivided India before the partition of India, then
90%.
you will be called a person of Indian origin. So citizenship is different, person of Indian origin is different.
Okay, thank you, sir.
Welcome. So moving back to the provisions. So we have to find out the residential status for the purpose of the taxability of various kinds of income. Then the second step, of course, classification of income under different heads. So we are just discussing these topic in very small or very short because we have already discussed these topic in the respective heads and lectures. So whatever income information has been given, you have to bifurcate it. You have to divide that income under various heads by applying the respective exemption and deduction. So whatever information has been given, you have to find out if salary income is there, what amount of income from house property is there, if there is any PGBP income, if there is any capital gain, if there is any income from other sources. The income of an assessee should be identified and grouped under the respective head of income. You have to apply the charging section, the deeming provision, etc. under various heads. Then computation of income under each head by applying the exemption deductions which is applicable to the respective heads of income. Income is to be computed in accordance with the provisions governing a particular head of income. Assess the income under each head by applying the charging, again the special exemption, etc., which is applicable for that respective head of income. Be very careful when you are applying any exemption under respective heads because you have to remember that whether do I need to calculate income under default tax regime or the calculation need to be done under optional tax regime. There would be some deductions, exemptions which are not available under default tax regime, or that is different provision under default tax regime or under optional tax regime. Like in case of standard deduction under salary head, 50,000 you can take under optional tax regime, and under default tax regime it would be 75,000. There are certain deductions which are not allowed under PGBP head if you are following default tax regime, like contribution for scientific research, section 35 AD deduction, etc. So you have to remember that what kind of deductions are not allowed under default tax regime. Then after calculation of all income under various heads, the clubbing of income of a spouse provision need to be applied if those are applicable in that specific question. After clubbing, we have to go to the set of provision. Again, set of concept is also different under default tax regime and under optional tax regime. You might remember under default tax regime, the set of provision difference is income from house property. The income from house property losses cannot be set on. And if you are having a self-occupied property, then there is no allowability of interest deduction if you are following income from house property provisions under default tax regime. After set off and carry forward of losses provision, you will get your GTI. So for after applying intra-head, inter-head provision, etc., you will get your GTI, and there would be some loss which could be carried forward, and there could be some losses which cannot be carried forward. After finding out the gross total income, we have to now find out deductions which is applicable under default tax regime or under optional tax regime. Certain deduction, pre-deductions was under default tax regime, and under optional tax regime, there are multiple deductions. So after computation of gross total income, now you have to find out the deduction from gross total income. And once you will reduce the deductions, those are applicable whether on payment basis, certain income basis, etc. You will at your total income, and which is your total income, taxable income, income chargeable to tax, etc. So these are three deductions which is allowed under default tax regime. Computation of total income, whatever is your GTI, if you reduce deductions which is applicable, then you will be at your total income. And please remember this, your total income should be rounded off to the multiple of 10 rupees. Your total income and tax, total tax, always needs to be rounded off up to the multiple of nearest of 10 rupees. So you have to do this in the examination also. Whatever is the calculation of your total income, please round it off in the multiple of 10 rupees, and so same in the case of calculation of total tax. Now, once you have arrived at your total income, Neeraj is saying, but sir, once we opt for tax regime, we cannot change to another. We can change the tax regime. We can change. If you are a salaried person, you can change your tax regime every year. Maybe you applied default tax regime in this year, and the next year you can go for optional tax regime and vice versa. So there is no restriction if you do not have any business income. If you do have a business income, then you can opt for optional tax regime. Suppose if you are in business income, if you are having any business income, then the main regime is default tax regime. So automatically, which regime would be applicable? Default tax regime. That's why its name is default tax regime. But if you are having some business income and you do not want to apply default tax regime upon yourself, then you can opt it out. You can come outside default tax regime and you can take or file your return as per optional tax regime. And after some time, if you want, then you can again went back to the default tax regime. So you have option to come out of the default tax regime only at once. So if you are falling or filing your return under default tax regime, you have option to come out of it only at once. Once you come out from default tax regime, then you need to file your return under optional tax regime always. And if you decided to go back under default tax regime from optional tax regime, that is allowed. But if you went back to the default tax regime, then you cannot change your default tax regime until you have ceased to have any business income. So until you are having business income, suppose in previous year 22-23, you are under default tax regime. Under 23-24, you decided to come under optional tax regime if you are having business income. Now you have to file your return under optional tax regime. You cannot change it. But you can go back to default tax regime. So if you did this, if you came back to the default tax regime after changing it once, then that is going to be locked. Then now you cannot go back to the optional tax regime. Navneet is saying, sir, how to file update return after 31st December when return under section 139(1) is filed? Because I saw a video, there is a JSON file, something how a JMN can file update a return. What is your question, Navneet? Navneet, you are asking me the process of filing of update return. That is not in our syllabus. Practically, how can we file? That is a different case. But if you did not file your return up to 31st of December, then you can file your updated return. So what is your question? You're asking, sir, how to file update return after 31st December when return under 139(1) is filed. So that is practically, you might seen a video in which somebody has make a JSON file. JSON file is the software file in which that format has been designed, and you need to upload it via utility or any software, and you can do that after 31st of December. So we cannot discuss the process because that is completely different and out of our syllabus. Now the rates. This is why I was asking you to revise the basic concept chapter. Application of rates. Once you have arrived at your total income, then you have to see what is my tax liability, and that would be depend upon which regime you follow. If you are under default tax regime, then whatever income is there up to 4 lakh, there is no tax liability, of course. From 4 lakh till 80,000, the difference of 4 lakh is going to be taxed at the rate of 5%. That means your tax would be 20,000. From 8 to 12 lakh, that means now the difference of 4 lakh is going to be taxed at the rate of 10%. That would be 40,000. Then this would be 60,000. This would be 80,000. This would be 1 lakh. And if you'll see the aggregate, that would be 3 lakh. So up to 24 lakh, your tax would be 3 lakh in aggregate. You can learn this like this also. Up to 4 lakh, not taxability. Next 4 lakh. Then next 4 lakh. Then next 4 lakh. In every next 4 lakh, this amount has been increased by 20,000. 20, 40, 60, 80, 1 lakh. So you have to remember these rate, of course. In case of optional tax regime, we know there are 3 basic exemption limit, 2,50,000, then 3 lakh, then 5 lakh. So we have gone through with these provision in detail in basic concept chapter. So I'm not going to revise it over here. Surcharge provisions are very, very important and little technical also. So let's see. The surcharge topic we have discussed earlier in basic concept. So please be very careful when you're applying the surcharge rate, because surcharge rates will be little tricky when you're applying in that questions like opting out of default scheme. That means if you are under optional tax regime, that these were the surcharge rate and it depends upon these things. Please remember, the surcharge rate will depend whether you have any income under long-term capital gain, section 112A, 112 or 111A and dividend. If you do not have these kind of income, that's a good news. The surcharge rate would be normal rates, what we have already discussed. It would be 10%, 15, 25, 37, depending upon your total income. If these income exist with your other income, any of these income, 112A, 112 or short-term cap gain 11A or dividend, if any of these income exist in your total income, then surcharge rate would be different. If after including these income, your income is up to 2 crore rupees, then normal provision would be applicable. After including these income, if your TI is more than 50 lakh up to 1 crore, 10%. If more than 1 crore up to 2 crore, it would be 15%. If TI including these income and it exceeds 2 crore rupees, then surcharge would be 15% on the tax of all incomes. This is most interesting case. If total income without including these 4 income, if your TI is without including these income exceeding 2 crore or 5 crore, then surcharge rate would be different for both kind of income. On the tax of these kind of income, surcharge rate would be 15%. And on other income tax, whatever your tax on other income except these 4 incomes, if it is more than 2 crore up to 5 crore, the rate would be 25%. If it is more than 5 crore, the rate would be 37%. The good news is the surcharge provision for optional tax regime we were discussing and the surcharge provision for default tax regime. There is only one difference. In case of default tax regime, there is no 37% surcharge rate. This rate does not exist. So if income exceeding 2 crore or 5 crore, it would be 25%. So not applicable in default tax regime. Of course, not over there, not over here. Okay, 25% is the maximum rate. Aditya asking, sir, where to find optional tax regime tax rate? It is in the basic concept chapter, Aditya. You can go and watch the first lecture of basic concept topic. There were 3 lectures we have discussed, I guess, for basic concept. I guess in second or third lecture, we have discussed about the rates provision, and notes are also uploaded on the portal. Navneet is saying, if already filed on section 139, when then updated return can be filed? Yes, of course. If you have filed your return, then also you can file an updated return. If you did not file a return, then also you can file an updated return. We have discussed this point in yesterday class. You might missed it. Navneet is saying, conclusion is that surcharge on income 112A, 111A, 112 dividend, minimum surcharge is 15%. If it exceed the certain total income, more than 15 lakh, etc. Sir, updated report cycle start from 1-4. What is that 1-4? Moving ahead. So the surcharge rates you need to learn and need to apply very carefully. These are all provision we have discussed, the surcharge concept. Now, old regime or new regime, which is better, it will depend. We have to see, as discussed in the starting of this chapter, you have to calculate tax with applying of rebate also, surcharge also, cess also, and the respective rates. Then there would be a tax as per default tax regime, and you have to find out the tax under optional tax regime. AMT yet to come. So these are surcharge rates in detail has been mentioned over here. We have discussed that as per the diagram. That is more easy to understand. Now the rebate. So in case of optional tax regime, the rebate is up to maximum 12,500 rupees if your total income does not exceed 5 lakh rupees. We have discussed that. In case of default tax regime, the rebate would be applicable if your total income is up to rupees 12 lakh rupees. And even after that, the rebate can be applicable. So there was a specific provision in case of default tax regime. Up to 12 lakh, if your income is, you can claim rebate, which is up to 60,000 or tax, whichever is lower. But even if in case of default tax regime, even if your income, total income exceeding 12 lakh, then there may be applicability of rebate as per this provision. So this provision we have discussed in the basic concept with example also. Then cess need to be applied at the rate of 4% in all cases. Now here we come with the new topic of this chapter, and that is AMT, that is alternate minimum tax. Look, the solution of AMT or how to calculate the AMT tax is easy. The problem is why AMT is here. So that is technically not the part. But if you want to understand the requirement of AMT in our country, why AMT is here, then I believe after when I'll make you understand how to calculate AMT, there would be a confusion in your mind forever. That why do I need to calculate AMT? What was the requirement of AMT in our country? So first of all, we have to understand what and why AMT has been applied into our country. So there is a concept of MAT, called it MAT, which is minimum alternate tax. This is alternate minimum tax. This is minimum alternate tax, which is applied in case of companies, only for companies. And I guess this has been introduced somewhere around year 2000-01 in our country. I'm not sure, but I believe it was introduced in year 2000-01. At that time, only MAT is applicable on company. No concept of AMT was there. But after some time, department or government realize that what benefit MAT is giving to our country by applying, we should apply this kind of concept also in case of other than company. So for other than companies, AMT has been applied. Now the question is still is, why AMT is there? What AMT and why AMT is more interesting or more complicated to understand in respective of the solution part of AMT, how to calculate. So calculation part is easy, but what is AMT and why is AMT? That is more complicated. So let me explain you why it is over here. Let me show you the concept of why and what. But please understand this very carefully, because I believe most of the students who is actually in CA intermediate or reading this topic of AMT, they can calculate the AMT income and tax easily. But most of them does not know or do not know that what was the requirement of AMT, why this calculation is required. So let me tell you, because we have already gone through with PGBP head. So you will understand what exactly and what is happening in this example. Suppose taking an example of a partnership firm or a company. Let's take an example of a company, suppose an ABC Limited, because in case of company, MAT is applicable, concept is same. So in case of company, you will understand it in a better way. Suppose ABC Limited is there, and generally all the businesses maintains two kinds of accounting. One as per accounting provisions, one as per income tax provision. That's what we do in PGBP head. What we do in PGBP head, under PGBP head of income tax, we take the net profit of any business, which is as per accounting provision net profit. And then we allowed, disallowed some income or expenditure as per income tax provision. And then we will arrive at your income tax profit. So there are two kinds of profit declaration under our country, one as per accounting provision and one as per income tax provision. Okay. So what was happening earlier, हो क्या रहा था पहले आप समझो, that a company was declaring huge net profit. Suppose a company is declaring a net profit of 200 crore. So you can see, as a shareholder, I would be really happy. Due to this net profit, company was declaring dividend also. So the shares rate in the market was going up. Shareholders are happy. We can see this company is in a huge profit. So it's a good company. Companies availing the loan from bank, etc. on the basis of declaration of this profit. And why it was when this company shows this profit under Income Tax Act. So either they are showing profit very low, or there would not be any profit. They are showing loss. Suppose the profit is only 2 crore, or there is no profit, there is loss of 50 crore, etc. And how it was possible? It is possible due to some main things, if you understand, due to section 35 AD. There are specific businesses, those can avail 100% deduction. So what was happening? Suppose this business has make an expenditure of 600 crore for section 35 AD expenditure. So accounting will not allow this as 100% deduction. They will provide depreciation on this, only 10%. Suppose there is a building, there's a warehouse you manufacture, huge warehouse, and the cost of building is 600 crore. So what accounting treatment it would be? Accounting will not allow section 35 AD because there is no concept of section 35 AD in accounting. They will provide you the depreciation, and that would be only 60 crore. And under income tax, technically what we are doing, we are claiming this 100% 60 crore as expenditure. So there is 550 crore rupees extra expenditure we are claiming under income tax. Due to that, we do not have any profit. We are in loss. There could be other factor also. Now, if you are thinking, yes, we will have loss in this year. Now, suppose the thing is same. They will claim 10% in this year, then 10% in next year, then 10% in next year, then 10% in next year. So even under accounting, they will claim full 600 crore rupees benefit, but not in the 1 year. They will claim that in multiple years in future, like 10 years, 15 years. Under income tax, they claim the full benefit in first year. And after 2 or 3 or 4 years, they will be in profit and they need to pay tax on that income. So after 3 or 5 years, when they will set off loss of this, which has incurred due to section 35 AD, after suppose 5 years, they'll start having huge profit due to the allowability of this deduction in year 1. And under accounting, they will have a average profit of approximate 200 every year, because they are claiming deduction in installment basis. So their profit will not be like, their profit will be streamlined. And this company profit would be like this: loss, huge loss. And after some year, there would be profit. But this company profit would be like average, not very low, not very high. But this company net profit trend would be like this due to availability or allowability of a expenditure full value in the first year, and after 2 or 3 years when this loss would be set off in future income, then again they will start having huge profit. But this year they will pay no tax. They will say, no, we are in loss, we cannot pay tax, we don't have any income. And maybe 2 or 3 years until they set off this loss from their future income, they will not pay any tax. Maybe after 3 or 4 years, they'll start paying tax. This could be one reason. The reason could be section 10AA deduction, which is available for special economic zone. You must have gone through under deduction topic, section 10AA. It allowed deduction of your profit 100% for starting 5 year, then 50% for next 5 year, then 50% for next 5 year on fulfilling of certain conditions. So last, these 5 years are exemptions or deductions are on conditional basis. For these two, 5 or 5 year, you have benefit of 150. Now suppose this business falls under section 10AA. Now what will happen again? No benefit of deduction under section 10AA under accounting. But what will happen under income tax? Whatever profit you will earn, suppose another example, suppose a profit earned 100 crore. This business earned profit of 100 crore. Now due to section 10AA, suppose 100% deduction has been claimed for starting 5 year profit. So for next 5 year profit, they will pay no tax. They'll say, no, we don't have any income as per income tax. But in this accounting, they are having huge profit of 100 crore every year. So they are distributing dividend, etc. Yes, after 5 year, government will get 50 crore rupees benefit because deduction would be 50 crore only, 50%. And after 10 or 15 years, government will start collecting the tax. So due to these kind of deductions, those are especially available under income tax, but not available under accounting. The same case is additional depreciation. You can claim normal depreciation as well as 20% additional depreciation. So this will reduce your profit because you are claiming extra depreciation in a year. There is no concept of additional depreciation. So in this case, your depreciation would be normal depreciation. So your profit would be 20% higher in this case, which would be lower by 20% in this case. Automatically from next year, the profit would be increased because your WDV will be reduced. So what I'm trying to make you understand, as government has provided some tax benefit for businesses under income tax only, which is not available under accounts. So what was happening? A company is declaring huge profit under accounting, and in comparison to that, they were showing loss under income tax. So there was not any recovery of tax. So there was a issue. Government thought that okay, they will pay tax after 4 or 5 years. Before 4 or 5 years, they will claim the loss or they will claim this deduction. But after 4 or 5 years, they will pay tax. We will recover that tax at that time. It's okay. But there could be a problem. Suppose after 5 years, this business shut down. So we thought that okay, we will collect tax and that tax would be for our country benefit. And we will collect that tax after 5 years, 7 year, 8 year, when the loss would be recovered or where the exemption time duration has been expired. But suppose what if the business has been shut down after 5 years or 10 years? What will happen? That business, those earned actually thousands of crore rupees in real life. And practically, he is having a cash flow of thousands of rupees in those 5 years. But government will lose tax on this due to the shutdown or due to amalgamation, merger, or any case. So if it happened, that would result in the revenue loss of the government. And government cannot do anything because government has provided these deduction under income tax to enhance or to encourage these businesses in our country for the purpose of welfare of our economy. So department has provided these deductions. So these person are not doing anything wrong. They provide the deduction, department, we have availed it. Now if the business shutdowns, we cannot help it. So, and the problem is, as I always said, government needs the revenue flow every year to maintain or to uh, use the funds for the welfare of country on a regular basis. If you'll wait for 5 years or 10 years and you will not get anything, that would be a huge loss. Let me give you a very simple example to make you understand this thing. Suppose your pocket money is 5,000 rupees per month and you're asking your parents to increase it. And they say, okay, now your pocket money would be 20,000 rupees per month. From 5,000, it would be 20,000 rupees per month. But we will pay you the consolidated pocket money after 5 years. So it is 20,000 per month. That means for yearly, you will get 2,40,000. But we are not going to pay it right now. We are under section 35AD exemption, 10AA benefit. So we will pay you this 2,40,000 combinedly after 5 years. That would be 12 lakh rupees. You thought, okay, I will get that amount after 5 years. But there would be two problems. First of all, how you will survive these 5 years because your expenditure would be regular every month. You need pocket money for your expenditure also. So how you will met out those expenditure because you will get that amount after 5 years. So they have increased your pocket money from 5,000 to 20,000 and you should be very happy. But the problem, how you will survive for next 5 years. And after 5 years, what will happen? God knows. After 5 years, you are waiting for the pocket money and maybe there's some other circumstances. There could be change in policies. There could be shutdown. Your parents say, no, we will not pay you anything. Anything could be happen because they are companies and companies or businesses can be shut down. So in that case, for 5 years, survival was very difficult for you. First problem. And after 5 years, if it doesn't happen as you expected, it doesn't happen like you expected, then you will be in a huge loss. So that's why to overcome this problem, AMT has been introduced. So whether you are a company, whether you are a partnership firm, whether you are an individual, you can claim section 35, AD, 10, AA, etc. So there could be situation when after 5 years that partnership firm, individual, etc., they can shut down. So to overcome, to solve this problem, AMT has been introduced. Technically, MAT was introduced for the companies, and after government see the success of MAT in respect of company, they need to apply the same concept for other than company. And they have changed just the name by changing the words, minimum alternate tax. So they have changed to alternate minimum tax. And what AMT is going to do? Nothing special. AMT says, we are going to recalculate your income. Like as per income tax, you are in loss. Okay, got it. You are income tax income. We will consider you are having loss of 2 crore rupees. Okay, no problem. But under income tax, we introduced a new concept of AMT. And we need to recalculate your income as per AMT provision. When you calculate your profit under income tax from accounting concept, then you take the profit as per accounting and you add back or allowed or disallowed income or expenditure as per income tax. Clear? Now for AMT, now you will take net profit as per income tax. Suppose there was loss. We have showing loss of 2 crore rupees. So, okay, you have loss of 2 crore rupees under income tax. Now we will take that profit for the calculation of AMT. And what we will do? We will add back section 35 AD deduction if claimed. They have a specific format. They mentioned what you need to add back. If there is section 10 AA deduction, we are going to add it back. If there are certain deductions under section 80C to 80U, notified deduction, there are certain deduction out of the deduction, we are going to add it back also. Then whatever would be your profit, that would be called your adjusted total income. They have given a new name. That was total income under income tax. They have created a new name, adjusted total income. So let me tell you what will happen. This would be almost going to be equal with this amount. So the difference between the accounting and income tax was we just removed it. So what we are doing nothing. We are just now trying to find out another profit which might be not equivalent, completely equivalent. There is differences. There is allowed, disallowed concept is there, but the major difference of AMT was the major difference of loss is the reason of claiming these deduction that has been removed. So we have specific things to add back that is in a format. I'm just telling you what will happen. Now you will get a ATI, and let me tell you the ATI and the profit as per accounting would be not that much differentiate. They might be different. They will be different, of course, but not that kind of difference, which was under income tax and as per accounting provision. So technically, we will find some profit after adding back these kind of deduction. Now your loss would be converted into ATI. On this ATI, the good news is the tax rate is fixed. Under AMT, the tax rate is fixed, 18.5% for everyone, individual, HUF, etc., etc., etc. Fine. The tax rate is 18.5%. No slab rate benefit. Directly 18.5%. Plus surcharge as per surcharge provision plus 4% cess as per cess provision. So this would be my AMT liability. So due to the applicability of AMT, we just did what? We just trying to recalculate our income by removing the benefit due to which the loss would be there. The story doesn't end here. When assessee will pay this AMT tax, he will ask to the government, you know what is this? He will ask to the government, what kind of joke is this? What you are doing with me? When you are going to add back these deduction and I had to pay tax, then what is the benefit of these deduction? Remove these deduction. The no benefit of this deduction if I need to add it back and I have to pay tax 18.5%. Then what is the benefit of these deduction? Government say relax. we have one other thing, one new concept also, that is AMT credit. So if there is a question in your mind right now that what is the benefit of these deduction, let's remove it. So just patient, we will discuss. There is a concept of AMT credit also, like input tax credit under GST. They have provided in case of GST you paid. In the same way, if you pay tax as per AMT, the tax would be claimed or can be claimed as AMT credit. What is AMT credit? How can we utilize that? We will discuss as per the provision from the notes. But first of all, I just want to know that do you understand the concept of AMT? Why we are discussing it? If you understand the concept of AMT, then when we will read the provision, when we will solve the format, you will be automatically understand, okay, why we are adding back section 35 AD. Why I am adding section 10 AA? What is the requirement? The requirement is to collection of tax on regular basis and to remove the uncertainty of the loss which might be not able to collect the tax if we do not collect the tax right now. But again, if your brain say what was the benefit of these deduction, just skip that question. That question would be answered because we have the benefit of AMT credit also. That also we are going to discuss. Let me see what is your brain status right now. Arun Sagar saying, due to deduction, income tax department not get more tax. So the reason they introduced MAT exactly. Navneet Maurya, 0 to 5 rates you are mentioning. This is first time you are telling us why there is a provision, because in the examination they will not ask why provision is there. We cannot discuss why section 35 AD is there. I can tell you the reason behind every section, but we should have time for that. So a lecture is like we have limited time and we have to be more focused on the solution part. Why any provision is there, that is not the requirement of your syllabus also. But I know if we will not discuss the why concept in case of AMT, then it would be really a disturbing provision because you won't be able to understand what we are doing. The concept will be more easy when you will understand why we are doing something. Carry forward, then Lakshmi. Okay, understood. Well done. Thank you so much, students. Now moving on to the provision, and you will see provisions are simple. But without this why concept, that would be really, really difficult, or there would be a lot of confusion in your brain that why I am doing this. Okay, so AMT summary, the section 115JB is for MAT, and from section 115JC, we are having AMT provision. So I have made a summary how to find out the ATI. The main task to find out in solution of AMT is to find out the ATI, and then we have to apply the rate of tax. That is very simple. So AMT will be applicable as follows. Find out your regular income tax liability as per normal provision of the income tax. That means you need to calculate your net profit as per income tax, then other heads of income, etc. Then you will find out your total income. Normal provision. Then you have to calculate tax on it. And you have to do it under normal provision of the income tax. That means under optional tax regime. Calculate your net profit as per optional tax regime, other heads of income, your GTI, TI, etc. So first point say find out your regular income tax liability as per normal provision of income tax. Clear? Step number 2. Now we have to find out the ATI of the non-corporate assessee. How we are going to find out our ATI? Total income as per Income Tax Act. So whatever you have calculated your total income, your TI, which also include the net profit as per income tax provision. So you have to take your total income over here, TI. Now you have to add these specific deduction. These are fixed. Deductions under section 80 QQB, 80 JJAA, 80 RRB if claimed. So if you have claimed, any of these three deduction only, then you have to add it back. 80 QQB is for royalty in case of copyright, etc. 80 RRB is for royalty for patent, etc. 80 JJAA, you already explained it to me. That is for new regular workmen employees. If section 10AA has been claimed, you have to add it back. If section 35AD deduction, you have to add it back. You can claim depreciation on section 35AD amount as we do in accounting provision, but you cannot claim full 100% value. So if you have claimed full 100% value, suppose section 35AD 50 crore investment, and you must have claimed full 50 crore for calculation of net profit under optional tax regime. So now you have to add back the 50 crore, but you can claim the depreciation on it as per accounting, as per what we do in accounting provision. So you have to claim depreciation as per the rate mentioned in income tax, suppose 10%, 5. So net effect would be 45 in this case. After these three deductions, these three are fixed. This would be my adjusted total income, ATI. If this exceeding 20 lakh rupees, then AMT apply, otherwise AMT not apply. So if your ATI exceeding 20 lakh rupees, then AMT applicable, otherwise not. But if it's a partnership from LLP, then ATI, whatever amount ATI is, you have to pay AMT. So this exceeding 20 lakh rupees AMT concept is applicable in case of individual, HUF, etc. Details have been mentioned, do not worry. Rate would be 18.5%, surcharge as per surcharge provision, 4% cess. Step number 4, tax liability and total income. Now we have tax as per point number 1, normal tax as per income tax provision, and step number 3 is tax as per AMT provision. So whichever is higher would be your tax liability and respective income will be your total income. Suppose AMT tax is higher, then AMT tax will be your tax as per normal provision and ATI will be your total income. If normal tax is higher than AMT, then that would be your tax liability and that total income would be your income tax total income. Now, this is regarding the credit, AMT credit concept. We will discuss this credit concept later. First of all, I would like to discuss the provisions which has been given over here. These are the detailed provision in your study material. The Income Tax 1961 contains profit-linked and investment-linked deduction in order to encourage investment in various industries and infrastructure facilities. Income tax has provided like section 35AD, 10AA benefit for industry growth. Taxpayer who exercise the option to shift out of the default tax regime are eligible to claim such deductions, end up paying no income tax. That's what we were discussing. So taxpayer can claim deductions and maybe they are not paying any income tax or very small amount of tax, though they are capable of paying higher tax. Why they are capable? Because real profits are huge. As per accounting, profits are huge. They are paying dividend to the shareholder. It has to be kept in mind that our government also need regular consistent inflow of tax, which is one of its major source of revenue to fund various expenses for the welfare of country. Hence, in order to ensure payment of reasonable tax by such zero tax paying, marginal tax paying entities, the concept of alternate minimum tax has been introduced. So technically what we have discussed before discussing this topic, this is the theory, what we have discussed with the help of example to make you understand why AMT is there. Chapters 7th BA contains a special provision, special benefit like 35 AD, etc. The provision of AMT would, however, not be applicable to an individual. This is important. Not be applicable if your ATI is less than 20 lakh rupees or does not exceed 20 lakhs. So if your ATI is up to 20 lakh, then AMT is not applicable if you are an individual, HUF, AOP, BOI or artificial judicial person. That means in case of a partnership firm or LLP, always apply. Whether your ATI is 2 lakh rupees, 1 lakh rupees, whatever it is, you have to calculate tax if you are a partnership firm and LLP. Other than partnership firm and LLP, if ATI exceeding 20 lakh rupees, then only AMT provision would be applicable. Please remember it very carefully. Again, under default tax regime, if the question asks you to calculate tax under only default tax regime, then no AMT provision applicable. AMT would be applicable only if tax need to be calculated as per normal provision of the Act. If the tax is required to be calculated only under default tax regime, there is no AMT concept applicable. Accordingly, where the regular income tax payable by a person for a previous year computed as per normal provision of the Income Tax Act 1961 is less than the AMT payable for such previous year, the adjusted total income shall deem to be your total income. The rate is 18.5, surcharge and cess. This is adjusted income calculation, what we have already discussed in the format. I have made that format in which we have already discussed this provision. Now, tax credit for AMT. Now, what is AMT credit? As we have discussed, that if you need to pay tax 18.5%, and government is disallowing section 10AA, they are disallowing section 35 AD. Then SSC say, what is the benefit of these deduction? Why do I need to pay tax? Because I claimed these deduction as provided by you, but technically now you are removing the benefit of that deduction and I need to pay tax. So income tax say, no, we are having some concept of, and that is called AMT credit. Now what AMT credit says, excess paid tax, excess paid can claim as AMT credit in 15 years as provision of MAT credit. Can claim in the year in which normal tax is more than AMT. Credit would be normal tax minus AMT only. Tax credit allowable even if adjusted total income does not exceed 20 lakh in the year of set off. A person paying tax under default tax regime under section 115 BAC would not be eligible to claim AMT credit. So what is the procedure to give this AMT credit? Let me explain you with the help of an example. Navneet is saying only QQB, JJAA, RRB need to be added back. Exactly. AMTs for individual and HUF. So how can they pay dividend? I give example from the point of view of company. Company show high profit and pay dividend. In case of individual AM or HUF, partnership firm, etc., still they are showing huge profit. Not paying dividend, of course, they cannot pay dividend. That example from the point of view of company, because they show their good image in the eyes of shareholder, but not paying any tax to the government. But exactly we are discussing AMT, so there is no dividend concept, but still that partnership firm earning huge profit, investing in properties, expanding the business, but when there is tax point comes to there, they say we are in loss. So that was just for making you understand. Now the AMT credit concept. Suppose in year 1, your normal tax was, normal tax, when we say, it means optional tax regime. That was suppose 1,000 rupees. And AMT tax was suppose 1,100 rupees. And the provision says you have to pay whichever is higher. So in this situation, the tax you need to pay would be 1,100 rupees as per AMT. Now the provision says the excess would be claim as credit. This is AMT credit, the excess. So normally you have to pay 1,000 rupees. Now due to AMT you have to pay 1,100 rupees. So the 100 excess whatever you pay, this is your AMT credit. You can utilize this amount later. And this is available for your next 15 years. In next 15 years, you can claim this amount from your tax liability. Now in year 2, suppose normal tax is 600 and AMT tax is suppose 900. So what do we need to pay? We need to pay 900 rupees, whichever is higher. We cannot use this credit to pay 900 rupees because AMT credit can be utilized only in that year in which you can utilize this in which year? In the year in which normal tax is higher than AMT tax. So in this year, AMT is still higher. So you cannot utilize the 100 rupees credit, whatever you have. So you have to pay 900 rupees to the government. And the good news, you can have 300 rupees as AMT credit, which can be utilized from next 15 years. And you are having 10 rupees also 100 rupees credit old one. So total credit would be with you is 400 rupees. Now remaining year of this 100 is 14 years left. For this 100, 15 years allowed. For this 100 rupees, 14 years credit time is left. Now year 3, suppose your normal tax is 800 rupees. And your AMT tax is 750 rupees. Now whichever is higher. Now this is higher. Now in this year, you can utilize your credit. So the tax liability would be 800 rupees. How much credit we have? We have total 400 rupees credit, but we cannot utilize the full 400 rupees credit. The credit you can utilize could be only the difference of this year tax, like 800 minus 750. So this year tax difference was 50. So only 50 rupees credit from this 400 you can utilize as AMT credit. Only 50. So out of this 400, I will utilize 50 rupees from this because this time duration is less than this time duration. So I will utilize this 50 rupees credit. So I have to pay at least 750 rupees cash to the government as tax. So after this, now my credit would be 300 rupees balance AMT credit, which is having now 14 years left. And out of this 100, 50 rupees credit left. Now the time duration left is 13 year for this. This is for 13 year. This is for 14 years. Total 350 rupees. And so on. So suppose in next 15 years, if next 15 years or the balance 13 years, AMT tax always higher than normal tax, then this 50 rupees credit would be lapse. Understood? So this is the example. You can take the screenshot or you can write it down later by pausing it. But this is the way how we need to utilize the tax credit. If you will see with the help of an example, this is excess paid. Now you can read these points and you will understand the meaning or interpretation of these points with the help of an example. Okay, students, so let's take a small break and then we will resume with the other provision of this chapter. So, Nisarg ji, can we have a short break? Nisarg ji, can we have a short break? Let me call you. Nisarg ji, can we have a short break? Harivansh, we will take your query after the break. Let me call Nisarg. Please. हेलो निसर्ग जी ब्रेक मैंने बोला आपको Okay. Welcome back, everyone. I believe you must have your coffee, tea, etc. So let's see, is there any query? Neeraj is saying very bad provision, no benefit for SSC. Okay, Mustafa is saying it is like this AMT provision is like 115 BAC is there before it and it is then beneficial. No 15 BAC is here, so it will get more beneficial. Navneet is saying, sir, I have a doubt that if an assessee has income of 35 lakh after deduction section 80 QQB, JJB, RRB, but after adding these deduction back income would be 41 lakh. So income is more than 20 lakh, then AMT will be applicable on 41 lakh, 18.5% plus 4% cess. And tax as per normal provision on 35 lakh is 897. So taxpayer will want to apply AMT, or I have to misunderstood the concept. Please explain. It is mandatory provision. If your ATI exceeding 20 lakh, then you have to calculate tax as per AMT also. So in your example, I don't know the calculation you have done correctly, but if it is correct tax, like on 41 lakh, if it is 7,88840, and as per normal provision, as per optional tax regime, if the tax is 897, then he has to pay 8,97,000 rupees to the government. So technically in your example, he is not taking any advantages from government with the benefit of deduction, etc. So that's why he has to pay tax as per normal provision because higher needs to be paid. In this example, he will not get any credit because the higher is normal tax. If your AMT tax is higher, then you can only take the benefit of credit. But as per this example, Mr. Neeraj, you do not have any kind of credit. Aditya is saying, sir, how we can find out refunded amount and tax paid amount in optional tax regime and default tax regime? How can we find out refunded amount? What does that mean, Aditya? I didn't understand that. How it shows? There would be total tax, and after that, the prepaid taxes, which is called TDS, TCS, etc., all are going to be reduced. And after that, if the payment of TDS, TCS is higher, that would be your refund. And if not, then that would be your tax payable. Navneet is saying, so normal tax will be paid and AMT credit concept is not applicable. Yes, absolutely. In this example, normal tax need to be paid. There is no AMT credit provision. But in this example, you have to find it out default tax regime tax also. If the question asked calculate as per most beneficial, then this normal tax need to be compared with the tax of default tax regime. And then lower would be your final tax liability, but AMT concept would not be applicable in this case. Okay, moving ahead. So that was AMT concept. Now, someone asked about the can we, after filing return under optional tax regime, can we go back into default tax regime, etc.? So here are the provision regarding it. In case of assessee not having income from business or profession, so if you do not have any income from business or profession, you can switch in every year from optional tax regime to default tax regime or vice versa. There is no restriction on it. In case of individuals not having income from business or profession, the total income and tax liability may be computed every year, both in accordance with default tax regime and optional. So you can calculate your tax under both regime and you can file your return whichever is lower case, which is most beneficial to you. And regular provision of that, including provision linked to AMT if possible. If order to determine which is more beneficial and accordingly decide whether or not to shift out of the default tax regime. In fact, such individual can choose whether or not to exercise the option of shifting out in each previous year. This is the benefit if you do not have any business income. he may choose to pay tax under default tax regime in 1 year and exercise the option to shift out of the default tax regime in another year, and he can do this thing in every year. Now, in case you having business income, so in that case, you have only one chance to opt out of default tax regime and comes into optional tax regime. You can go back again into default tax regime, that is allowed. But if you go back to the default tax regime after opting out, then you cannot enter again under optional tax regime until you are having business income. If your business finished, you do not have any business income, then you can again start opting like as the first case. So in case of individuals having income from business profession, the total income and tax liability may be computed both in accordance with default and regular provision in order to determine which is more beneficial. Clear? Such individual has an option to opt out of default tax regime under this section, and the option has to be exercised on or before the due date is specified under section 139(1) for furnishing the return of income for such previous year. So before filing of return, you have to opt that option. For that option, you have to file a specific form on the income tax portal. And once such option is exercised, this is new, it would apply to subsequent assessment year. So if you opt out from default tax regime to optional tax regime, once you did this, then for future, this optional tax regime would be applicable upon to. You can go back again for default tax regime from optional. But once you go on, then you will be locked over there. Such person who has exercised the above option of shifting out of the default tax regime for any previous year shall be able to withdraw such option only once and need to pay tax under the default tax regime under section 115 BAC for a previous year other than that in which it was exercised. Thereafter, such person shall never be eligible to exercise option under this section except where such person cease to have any business income. Credit for taxes, whatever amount of tax you have paid, you can take the benefit at the time of filing of return. That means you have to calculate your total tax. Out of that total tax, you can deduct your prepaid tax. Prepaid taxes are TDS, TCS, advance tax, self-assessment tax, MAT credit if you have, relief, etc. This would be either tax payable, this would be either tax refundable. Tax payable or refundable. Navneet is saying, so normal tax will be paid and AMT grade concept is not applicable. Yes, Mustafa is saying, Hiram is saying, sir, can I opt optional tax regime while filing my revised return? If you have filed your return up to due date, then you can change it. But if you filed your return after due date, that means after the last date of filing of return or after due date, then you have to file your return under default tax regime only. Next is a very interesting topic, or you can say this is not a topic. This is actually a practical scenario which you need to understand. This is tax planning in respect of salary income. So I've told you that in this chapter, there are two new concepts. One was AMT and the second is this one. This says how to plan your salary structure. I believe that any one of your relatives or brothers, sisters, or cousin, if they are working in any organization, so they might ask you a question. I believe either though they have already asked you or in future definitely they are going to ask you this question. How do I need my salary structure to be maintained so I will reduce my tax liability or I will have maximum benefit? What is the procedure? How should I do this? So for this question, there is no specific answer. This is a very subjective question, that how do I need to plan my salary income so I will reduce my tax liability or I will have the maximum benefit of inflow in my hand. So there is no fixed answer for this question. It will depend upon your salary structure. What are the ingredients in your salary? What kind of allowance, what kind of perquisite your employer is going to provide you? Where are you are going to provide your services? What are the expenses you have to meet wherever you are providing your services? In which city you are providing your services? What should be your rental expenditure? What should be your conveyance expenditure, your daily expenditure, your food expenditure, etc. So multiple factor can affect your this salary structure. What is your investment option, provident fund, NPS scheme, medical insurance, health insurance? So you cannot have any defined answer of this salary structure. It is applicable for different. It could be a customized question, or you can say it's a subjective question depending upon different kind of employee in different manner. What exactly I am trying to explain you, let me give you an example so you would be able to understand more clearly. Because whenever there is an example like AMT credit, if you'll ask me AMT credit in verbal language, and if I'll explain you what is AMT credit, I believe that would not be easy to understand. But when we define anything with the help of an example, that thing actually make easy and more clear. In the same way, the salary planning structure provision, if I'll explain you in theoretical or verbally, it won't be that easy to understand. So we will take an example and then you would be able to understand that salary structure provision very easily. Like the same way someone was asking about the deemed resident today in verbal communication with me. So it's not easy to make him understand what was his query and what exactly he was trying to ask. So let me, if suppose somebody was asking, I don't know what, but if I explain you whatever he was asking in case of deemed resident with the help of an example, might be he would be get his answer more clearly. So who was that person who's who asked that question regarding deemed resident? Arun Sagar. Okay, Arun Sagar, if you are here, let me explain you the deemed resident concept. Maybe that was not that easy to communicate verbally because you are asking something. I am not make you understand. Maybe in verbal language, but when whatever your queries might be, you will able to understand right now. So if your question is this, what I able to understand that suppose there is a country XYZ. There is a country XYZ in which Mr. A reside. And Mr. A reside in XYZ country, but he is a Indian citizen. Mr. A is an Indian citizen. Now suppose Mr. A is having income from country XYZ. If I'll bifurcate that income from XYZ country. Suppose 50 lakh rupees. So 50 lakh is income from XYZ country. And from Indian resources, income from Indian resources, suppose like 20 lakh rupees. If it is less than 15 lakh, then the concept of deemed resident does not applicable. Suppose this is 20 lakh rupees. Now, if there would be two situations, whether Mr. A would be deemed resident or not, there could be two situations. The situation, so total income is 70 lakh rupees. Now there could be two situations to find out whether he is a deemed resident or not. So suppose the question says there is no tax at all. No tax at all in country X, Y, Z income. So on 70 lakh, suppose there is no tax at all in country X, Y, Z. So no tax on 70 lakh rupees income. So that's a kind of tax haven country. No tax liability on domicile basis. And suppose there is tax on 50 lakh, but no tax on 20 lakh rupees. So that means on foreign source income tax there, but there is no tax on Indian source income of 20 lakh rupees. Now there could be two situations, and now we have to answer whether Mr. A would be deemed resident or not. So we have two choices. This is option A. So if there is no tax at all in the country XYZ income, not even on Indian source income of 20 lakh, not on that source of income which he has earned from that country only. So he will be called. Now Mr. A in this case would be called deemed resident under section 6(1)(a). And what would be the situation in this case? You might be asking this scenario, I believe. So if this scenario you are asking, then in this case, Mr. A would not be deemed resident. So deemed resident concept would be applicable only when there is no tax at all in that country in which Mr. A reside. Even if tax on this income but no tax on Indian source of that country, then deemed resident concept would not be applicable. So I believe if that was your question, so it's easy to explain with the help of the practical example or an illustrative example. So I believe if it is clear, then correct. So Arun Sagar, I believe not here, but if he will see this, he'll understand whatever was his problem. Might be he would able to understand right now. Now moving on to our salary optimization or salary structure case. So in case of salary structure, case, this situations is subjective as I have discussed. Suppose there is Mr. A from Lucknow. He got a job offer from Mumbai. And the package was 50 lakh rupees per annum. He got a job offer from Mumbai with a package of 50 lakh rupees per annum. Now, if he'll switch from Lucknow to Mumbai, so there would be some expenditure which he needs to bear while performing his duties in Mumbai. So the major expenditure, which would be his major expenditure? Can you tell me some expenditure name which you, if shifted to another city for working purpose, you have to do? CTC is 50 lakh, yes. House, correct. Transport, correct. Groceries, correct. Fare, what is fare, Navneet? Food, of course. Transportation, travel, correct. So the basic or major expenditure we are talking, so one would be the rent or accommodation. One would be the commute expenditure, that means conveyance or transport expenditure. The food expenditure, as we said, daily expenditure. And other also. So basically there would be huge expenditure. These would be the huge expenditure, and just take an approximation that maybe it would be up to 15 lakh for a year. So per annum, he estimated that the expenditure would be 15 lakh. These are major expenditure, incidental expenditure necessary for performing these duties. Other shopping, etc. is excluded, but these are the basic expenditure he has to do if he shifted to do this job in Mumbai. So definitely after this, he would having 35 lakh rupees in hand, practically. We did not discuss the tax implication yet. Now he has two options. If I'll ask you that this assessee suppose comes to me. Suppose this Mr. A from Lucknow is my client. He called me, sir, I got a job opportunity in Mumbai and my package is 50 lakh rupees. So how should I structure my salary? What should I ask them to divide this 50 lakh rupees so I can minimize my tax liability or I will get the maximum cash flow? Now we have two options. If you'll see, option one. Suppose he decided to take full basic salary, 50 lakh. He say, I do not need any allowance, I do not need any perquisite, just give me 50 lakh rupees full as a basic salary. So if he opt this option, then what will happen? His full salary is going to be taxed. Basic salary, full tax after standard deduction. So we are not considering standard deduction. Then let me tell you his tax would be approximate under optional tax regime. If we go under optional tax regime, his tax would be 13,12,500 after including cess, etc. Approximate. So his tax would be, this is his outflow. This he needs to pay to the government. And the expenditure of rent, etc. The other expenditure, what he needs to pay by himself. Employer pay him 50 lakh rupees. Out of those 50 lakh rupees, he has to pay rental, conveyance, daily expenditure, etc. We estimated that 15 lakh rupees. This is also outflow. So if he decided to take full salary as a basic salary or as bonus or those category in which there is no exemption, basic salary, dearness allowance, he structure his salary in that manner that no allowances has been included. Those are exempted under a special category of allowances or perquisite. He decided he will get 50 lakh rupees salary in his hand and he will does expenditure at his own. So technically these are outflow and technically what will in his hand? So out of this 50 lakh, the tax he needs to bear, the basic expenditure he needs to pay. So after this, he will have in his hand as an inflow 2187500. Now you will see the power of correctly structured this salary, option 2. Now, if we decided that you have to do these expenditure of 15 lakh rupees anyhow, you will stay, you have to pay 15 lakh rupees expenditure, you have to expend that. So why do these expenditure at your own? You have to make this outflow of 15 lakh rupees anyhow. Even if you will take full basic salary, you have to make this expenditure from your pocket. So better to structure your salary in a manner that you will get these expenditure in the form of allowances from your employer. So suppose we have decided that do one thing, ask your employer that your basic salary should be 35 lakh. And the amount of expenditure you have to do on accommodation, conveyance, daily expenditure, let's take that allowances in the allowances form. So ask for HRA because you have to take an accommodation. So ask for HRA. For conveyance, take conveyance allowance from your employer. For daily expenditure, take daily allowance. Those are having exemption, etc. So take these expenditure of 15 lakh, which is major in the form of allowances. So ask this 15 lakh rupees. Bifurcate these expenditure in such a manner. So the value would be 15 lakh rupees and you can get the full exemption. full or majority part, like up to 12 lakh rupees, you can claim full exemption, etc. under HRA provision. So design your salary in the manner. So you will get 15 lakh rupees in the form of allowances, and we can claim the full exemption of those allowances. So you see, this conveyance allowance and daily allowance can be exempted in a section 1014 full value. If that is for official purpose, HRA can be claimed as exempted if rent paid is higher than that. So we will design his structure in a way that the amount of expenditure he has to do, he can claim in the form of allowances, and those allowances, for those we can claim the maximum exemption. So suppose we have taken full exemption of these allowances. So still employer paying him 50 lakh rupees. We just change the structure. 35 lakh rupees in the nature of basic salary and 15 lakh rupees in the nature of allowances. So still employer paying 50 lakhs same. There is no difference. So employer does not have any issue. He will pay 50 lakh rupees whether in the form of allowances or salary. So that does not make any difference in the hands of employer. But the taxable value would be in this case only 35 lakh. Because 15 lakh we will take as an exemption. Now we need to calculate the tax outflow on 35 lakh rupees only, and that would be approximate 8,62,500. And of course, the expenditure I have to do, I have to pay this expenditure. So that would be again same. I will take in the form of allowances and I'll make that expenditure. So 15 lakh would be my outflow again. So in this scenario, if you'll see, out of 50 lakh, 15 lakh and 8.62. So my inflow would be now higher, and that inflow would be 2637500. So how much benefit I take? The benefit would be, the inflow was this in this scenario, and it was 21,87,500 in the first option. So the benefit would be approximate 4,50,000. So you will get extra 4,50,000 in your hand. And this is technically the tax saving what we done. Just change the salary structure. So does your employer would have any problem by paying those 15 lakh in the form of allowances instead of paying as a basic salary? No, he will still needs to pay 50 lakh rupees anyhow, but you will get the benefit of 450. Suppose if this expenditure is not 15 lakh, it's 20 lakh rupees. Then you will have more benefit by doing this. Suppose there are more expenditure, and we can see this also. Suppose in HRA we are taking this expenditure, there could be possibility when rent-free house benefit is more than HRA in this situation. There could be car facility is more beneficial. So on the basis of the salary structure, on the basis of that employee expenses in that city, we have to see which case is maximum beneficial. One more example, like if he needs to pay insurance premium, medical insurance premium, then he can claim section 80D deduction. But if that medical insurance premium deduction he will take, that would be only 25,000 rupees, maximum 80D. And suppose he wants to take a medical insurance premium of 1 lakh rupees per annum. So if he pay 1 lakh rupees by himself, he will get the benefit of 25,000. But if he'll ask his employer that you pay medical insurance on my behalf, health insurance on my behalf. So health insurance premium paid by employer is exempted. Life insurance paid is taxable, but health insurance exempted. So he will get the 1 lakh rupees benefit, full benefit of 1 lakh. By not paying himself, he can take the benefit of extra 75,000, because if he'll pay himself, only 25,000 benefit. So tax would be reduced by decreasing the income only on 25,000. So he will have the benefit of tax upon only 25,000. But if he'll ask his employer to pay 1 lakh rupees as in medical insurance on his behalf, so that could be the extra 75,000 rupees tax saving on that benefit. So this question answer cannot be any fixed answer, that how to define your salary structure. You need to consider multiple things like investment in RPF is beneficial, investment in NPS is benefit or not, your scheme is optional, default, whatever it is, you have to do a lot of brainstorming to find it out the correct combination for it. So in the chapter also, in this topic also, what we will discuss, they will give you some hint that you have to take the perquisite, those are exempted, you have to take the allowances, do not go for basic salary higher amount, it would cost you, it will be taxable full value. But the ultimate aim, the summary of this topic would be at the end that you have to see which allowances are more beneficial, which perquisites are more beneficial, etc., etc. So no fixed answer of this kind of question. It cannot be possible to give a single answer that this would be the structure, this should be the structure for all employee. It will change accordingly. I hope it's clear. Aditya asking, sir, how 1312500? It's a tax what we have calculated. This is tax on 50 lakh rupees, Aditya. You have to watch basic concept chapter 1 to calculate tax. So this tax we calculated on 50 lakh rupees. Chalo. Clear. Very good. Now moving on to the provision. Let's read this concept from your study provisions, and you will see at the end, they will say only one thing, that it is subjective depending upon different person, depending upon different employer, based on your salary structure, your expenditure, etc., etc., etc. The definition of salary is very wide and includes not only monetary salary but also benefit and perquisite in kind. Under the default tax regime section 115 BAC, deduction is 75,000. However, under optional tax regime, it's 50,000. The following are some of the aspects which can be considered for tax planning in regards of salary income. So some of the aspects, because there could not be any fixed structure. The salary structure, an employer may plan the salary structure of employee, keeping in view the deduction and exemption available under that. If salary is paid as consolidated amount without any breakup, the amount of salary after providing deductions would become taxable. So if he's going to pay full amount as a basic salary, then only you will have the benefit of standard deduction. After that, full amount is going to be taxed without any further exemption and deductions. Therefore, the employer may structure the salary by including various allowances, perquisite, so enabled employee to optimize his tax liability. Understood? For example, the employer may include allowances at part of salary structure of employee, which will be like children education allowance, hostel allowance, house rent allowance, and the above amount must paid while computing his profit and gain of business or profession. So employer can get the benefit as an expenditure because it would be part of salary. So there is nothing uh, has been mentioned which is fixed. You can take the leave travel concession. So if you are taking 50 lakh rupees as a basic salary and you are going out for travel purpose, again that 50 lakh you have to pay tax. You can do this thing also, that you can ask your employer that out of that 50 lakh, 1 or 2 lakh rupees, provide me as an LTC. So again, you can get the benefit of LTC exemption also. Employees welfare scheme, there are multiple employer welfare scheme employees in which you can invest. You can ask your employer to invest, so you will have the tax benefit. The reading is enough. Insurance policy, as I've explained to you, it's better to take medical insurance premium payment from your employer instead of asking him to pay your life insurance premium, because life insurance premium is going to be taxed, but medical insurance premium paid by employer is not going to be taxed. Dearness allowance, dearness pays are fully taxable. So just try to reduce the dearness allowance and dearness pay. And if it is a dearness allowance, then ask your employer that should be the part of your retirement benefit. Because if it is your part of retirement benefit, then for the purpose of exemption of HRA, only the DA which is as per terms of employment is going to be included for the purpose of exemption. So your exemption would increase. For gratuity exemption also, DA as per retirement benefit is included. So gratuity exemption would increase. For leave encashment also, for provident fund provision also. So if there is a dearness allowance, ask your employer to make it a part of retirement benefit or as per terms of employment. So that DA will increase. It will have the impact to increase your exemption in all the allowances in which the DA as per terms of employment is going to be included. Again, leave travel facility you can ask your employer to provide. So that is the way you can get the benefit of exemption. You have to decide whether rent-free accommodation is beneficial or house rent allowance is beneficial. In some ways, it could be benefit to take rent-free house, or in some case, it is benefit to take HRA, depending upon different salary structure. No fixed answer. Uncommuted pension and commuted pension. So uncommuted pension is always taxable, and commute pension you can have an exemption of 1/2 or 1/3. So accordingly, you have to see which kind of pension you need to be collected from your employer. Other benefit, tax perquisite, consideration for salary structure. Again, same topic that you have to read salary chapter very wisely, very deeply to understand which kind of perquisite and allowances are exempted. And you have to structure your salary in a way so you can have the maximum benefit of those perquisite and allowances, those having exemption. This is all they are trying to explain you. So the topic ends over here, except now we have to go through with the illustration and question. In this chapter, there are two illustration 1 and 2, and I will solve those illustration with you, of course. And the basic questions, the question, almost 14 questions are in test your knowledge part has been given. That is also the most important question out of those 14 questions I will solve with you. So you will have an idea that how to solve these questions in the examination. So illustration 1 is there. Let me see if there's any query. Dhanlakshmi is saying medical insurance paid by employer will be deducted in the salary of employee and it will be reflected in the payslip whether medical insurance paid is considered as paid by employee or employer for income tax calculation. It would be considered as paid by employer, Dhanlakshmi. It would be deduct if it has been deducted from your salary. Then in that case, if it is not going to be part of your salary, that would be paid by employer. If it is showing as a part of your salary, then you can claim deduction under section 80D. So it will depend upon what is the policy has been opted for medical insurance premium. If it has been deducted from the employee salary, in that case, you can claim deduction under section 80D. But if it has been paid directly by the employer as a perquisite, then that perquisite would be exempted in your hands. Every employee can ask his employer to create salary structure for employee benefit and any allowance he can get, or employer will fix the salary structure. Look, in a big organization, the employer has already having a specific policy that what will they provide to employee. You cannot ask them that please put this value or this allowance in my structure. So they have already defined structure. You cannot ask them to change. But for the purpose of theoretical provision, we will definitely recommend that you should change it, but that's not practically possible. The big organization don't change their salary structure employee wise. They have a specific policy and they follow that policy. Does salary structure question comes in examination? It could come in examination. Illustration 2 we will solve in this study material. That kind of question can be asked in the examination. And everything is important, and whatever is in a study material, anything can be asked in the examination. Sir, in 80C, how NPS or OPS taken? Look, this is deduction topic, Aditya, and I don't know what you are asking. Mustafa is saying Sir, we have only one class left. If we don't do all questions, please mark us best adjustment, which is tricky. Yeah, of course, do not worry. You have to solve all the questions. I will try to solve all those 14 questions in tomorrow's class. So tomorrow is the class in which we will only solve these questions. Even if there would be revision class also. In the revision class, that would be maybe before you 1 month of your examination would be there. In the revision class, we take previous year questions, we take MTP, etc. questions for revision also. So till that time, you would be able to complete your test and knowledge questions and your illustration, etc. And MTP and previous year question definitely we are going to take in the revision class. So illustration 1. Mr. A, aged 32 years, is employed with XYP Limited on a basic salary of 80,000 per month. He has received transport allowance of 15,000 per month and house rent allowance of 20,000 per month from the company for previous year 25-26. He has paid rent of 25,000 per month for an accommodation in Delhi. Mr. A has paid interest of 2,10,000 for housing loan taken for the construction of his house in Mumbai. The construction of the house is completed in March 26 and his parents live in that house. So that is means it is for self-occupied purpose. Other information has been given: contribution to PPF 150, contribution to 80 CCD 50,000, payment of medical insurance of father who is age of 65 year 55,000, payment of medical insurance premium 32,000. Compute the total income and tax liability in the most beneficial manner. So this is very important to understand what is the requirement of question. So they are asking for most beneficial manner. That means we have to calculate the tax under both regime. And if AMT apply, then we have to also calculate the AMT tax. This is a simple question. Let me show you the solution. So the basic salary has been given 80,000. Please remember, when you solve a question, please follow the format. You have to write it down for solution of every question. The heading should be there, that computation of total income and tax liability of assessee for assessment year 26-27 and which method you are following. This needs to be write it down in every numerical question. Suppose this is a question of capital gain, then you have to write it down computation of capital gain. It is a question of PGBP only, then you have to write it down computation of PGBP income. Suppose it's a salary question, then you will write it down computation of salary income, computation of house property. So please make a habit that whenever you are solving a question, please write it down this heading always. And you have to follow the format of heads of income. The first heads of income we have discussed was salary. So in the final solution part, whatever you are presenting as a final solution, the first income need to be considered as salary always. The second should be house property. The third should be PGBP. The fourth head would be capital gain, and the fifth head income would be income from other source. So at working note, you can solve house property income provision first, then PGBP, then cap gain, then salary, does not matter. But in the final presentation, you are going to show in the examination, out of that working note solution, the first income should be salary head of income, then house property, then PGBP. Please remember this. Now, basic salary was 80,000. 9,60,000 was your basic salary. Transport allowance is 180. HRA is 240. So there is no exemption of HRA and transport allowance under default tax regime. So this would be your gross salary. Standard deduction 75,000. Income from house property. So you will see that the house is on self-occupied mode. And if the house is on self-occupied mode, then you cannot claim the interest benefit under default tax regime. No allowability of interest if property is for self-occupied under default tax regime. So this is, you can see there is not applicable, no interest benefit. This would be my GTI, no deduction, because the reductions is only allowed in case of section 80 CCD2, then Agnivir Yojana, and then 80 JJAA. No reduction allowed. This would be my total income. And the tax liability on this total income would come 78,780 rupees. Clear? Simple question. That's why I'm just solving it in the sheet only. Otherwise, I'm going to solve all the test your knowledge question in the separate whiteboard. Now, again, we have to solve this question under normal provision of the Act. So the salary would be same, transport allowance would be same. HRA received, because you can claim the benefit of HRA under section 1013A under optional tax regime. So HRA received is 2,40,000 and the exemption is 2,04,000. Out of this, HRA received actual rent paid minus 10% of salary and 50% of salary. Out of these three, lowest is going to be exempted, which is 2,04,000. So taxable HRA is 36,000 rupees. Now, out of this gross salary, deduction would be 50,000. In case of self-occupied property, under optional tax regime, you can claim maximum 2 lakh rupees interest deduction under income from house property. So this is 2 lakh rupees. We have done the set off also. House property losses can be set off from salary head of income. So gross total income would be 9,26,000. Out of which we can claim the deduction, which is for contribution to PPF under section 80C, 50,000 for employees' own contribution to NPS, the medical insurance for himself maximum 25,000, and for senior citizen parents it could be maximum 25,000. So total income is 6,51,000 rupees. And the tax would be 44410. And you can see this is lower than the default tax regime tax. So we would like to pay tax as per normal provision of the Act. So it is beneficial for him to opt out from default tax regime in this case. So illustration 2 is like for salary structure. Somebody was asking in the chat box that whether salary structure questions can come in the examination. Yes, this kind of question can come. This is related to salary structure. And you can see they are saying salary is 41,000 per month. He has given an option. Either he can take an HRA of 7,000 per month, or he can, for which the rented is 6,000 rupees. So either he can take a HRA or he can take a rent-free house. So he has an option to take a rent-free accommodation or can take HRA of 7,000, for which the rent paid need to be 6,000 in Delhi. So you have to advise Mr. Kadam whether it would be beneficial for him to take HRA or rent-free house. And this is very interesting. Give your advice on the basis. The basis is net take-home cash benefit, not the tax higher or tax lower. You have to see the inflow, cash inflow, in which case the cash inflow would be higher than the other case. As the example we have discussed, we have seen the net inflow because that is matter. Even if you are paying tax higher, but if the net cash inflow is in your favor, then it's better to opt that option. So tax higher is a different case, but net inflow, that really matters in case of salary structure. And in question also they have asked that you need to answer that which basis is beneficial from the point of view of net cash flow. So once you need to solve this question by considering rent-free house, and once you have to solve this question by considering HRA. Neeraj is saying, Order should be like the order of chapter. Yes, Neeraj, correct. Clear is saying Navneet. Okay. So now basic salary is 41,000 rupees per month. So in both case, basic salary would be same. First case, we are opting for HRA because if we are opting for HRA, then rent-free accommodation case not applicable. So we have to see what HRA will do with us. HRA is 7,000 per month, so 84,000 for annual. Then as per HRA exemption, 50% of basic salary, actual HRA received, rent paid minus 10% of salary. Lowest would be 22,800. So out of 84,000, lowest would be exempted. Taxable HRA would be 61,200. This would be gross salary. This would be standard deduction. This would be net salary. If you opt for HRA, your net salary would be 5,03,200. If you go for rent-free house, then this is your salary. And in case of rent-free house, 10% is going to be your taxable value. You are in Delhi, so that would be 10%, 49,200. Then it would be 5,41,200, 50,000 deduction, 491,200 is your net salary. And this would be tax on your income. In this case, your tax would be 13,140, no rebate. Your final tax liability would be this in those circumstances. In case of HRA, it would be 13670. In case of rent-free house, the tax is nil. Let me tell you, we are not going to decide, we are not going to give our answer on the basis of tax. They ask that you have to give your answer on the basis of inflow. And now they show the inflow case. Inflow of salary. The salary is 5,76,000 rupees. Clear? If you opt for HRA, then you have to pay rent of 72,000 and tax liability is for 13,670. So technically you will have inflow of 4,90,000 and 330. But if you will go for second case, in that case your salary would be 4,92,000. You do not need to pay any rent. You do not need to pay any tax. This will be your inflow in the hand. So that is beneficial from the point of view of inflow also. Clear? Let me see. 115 BAC margin relief applicable. Yes, margin relief is there in both the cases. So this has been done. In tomorrow class, we are only going to take these test your knowledge question. These are very, very interesting question, and these kind of question would be the part of your compulsory question, which is going to be asked in the examination as compulsory question, which would be there to calculate your total income and tax, etc. So there are 14 questions and I will try to take all the important questions. At least we will discuss 10 or 8 or 9 questions. And if time allowed, we will discuss all the 14 questions over there. Navneet is saying, thank you, sir. Neeraj is saying, sir, tell us what we should revise for tomorrow class. I have asked you in multiple time in every class. You have to revise chapter number 1, basic concepts, rates of tax provision, PGBP, capital gain. You should revise at least these 3 chapters to understand the provision. And out of these 3, basic concept and PGBP is utmost important. Let me see any query on portal. Query portal, there is no query. So do you have any query, students? Else we will go for a short story and then we will end our session. नो मोर क्वेरीज। चलो एक फटाफट से स्टोरी सुनते हैं, एंड क्वेरी होगी तो भेज देना, वी विल डिस्कस दैट क्वेरी, नॉट एन इश्यू। स्टोरी मेक्स अ डे। ओके, सो एक बार क्या हुआ, एक पर्सन थे मिस्टर ए, उन्होंने अपने यहाँ जो घर था उसके बाहर एक गार्डन था बहुत बड़ा, वहां पर 10 ट्री प्लांट करे। थोड़े बड़े ट्री थे, मतलब प्लांट्स करे अपने गार्डन के साइड में। एंड उनके घर के पास एक और किसी और का भी घर था, वहां भी एक गार्डन था, वहां पर भी जो उनका नेबर था उसने भी वहां पर 10 उसी तरह के ट्री प्लांट करे, जो छोटे ट्री थे। एंड हुआ क्या, थोड़े दिनों के बाद वो प्लांट्स जो थे वो थोड़े से बड़े हुए। एंड जो मिस्टर ए थे, जिन्होंने अपने गार्डन में ट्री प्लांट्स किए थे, वो हर थोड़े टाइम के बाद, एवरी आफ्टर 10 डेज, वो हर 10 दिन के बाद आकर या 15 दिन के बाद आकर अपने प्लांट्स को जोर जोर से हिलाते थे। एंड उन प्लांट्स को बहुत तकलीफ होती थी, उनको बहुत पेन होता था, बिकॉज उनको हिलाने की वजह से उनकी जो रूट्स थी वो स्ट्रेच होती थी, उन्हें पेन होता था। फिर उनके जाने के बाद वो दोबारा से उन्हें अपनी रूट्स को सॉइल में और इंक्लूड करना पड़ता था अंदर, वो बहुत मुश्किल होता था, उन प्लांट्स को बहुत पेन होता था। बट जो पड़ोस वाले घर में प्लांट्स थे, उनका जो ओनर था वो ऐसा कुछ भी अपने प्लांट्स के साथ नहीं करता था। तो जो प्लांट्स आपस में ट्री बात करते थे कि यार हमारा वाला जो ओनर है वो हर 10-15 डेज में आकर हमको शेक करता है, उससे हमें बहुत पेन होता है, हमारी रूट्स टूट जाती हैं, वी हैव टू वर्क हार्ड अगेन टू गेट स्टेबल। और दूसरे वाले प्लांट्स होते वो बड़े खुश होते थे कि हमारा ओनर हमसे ऐसा कुछ नहीं करता, सो वी आर वेरी हैप्पी। तो ऐसा चलता रहा कुछ टाइम तक, लाइक 1 मंथ, 2 मंथ, 3 मंथ्स। एंड जो प्लांट्स को आके उसका ओनर बार बार स्ट्रेच करता था, हिलाता था, शेक करता था, वो वाले प्लांट्स बहुत परेशान रहते थे और अपने अपने ओनर की बहुत बुराई करते थे, बोलते थे ये बहुत गलत है, बहुत परेशानी है हमें, काश हम उस साइड होते, बिकॉज यू डोंट हैव एनी इश्यू, यू डोंट हैव एनी पेन। हुआ क्या, 3, 4, 5, 6 मंथ्स बाद एक बहुत जोर की आंधी आई, और उस आंधी में जो दूसरे साइड के प्लांट्स ट्री थे वो सारे गिर गए। बट जो ये वाले प्लांट्स थे जिनका ओनर उन्हें एक टाइम के बाद आकर थोड़ा स्ट्रेच करता था, शेक करता था, वो वाले सारे के सारे प्लांट्स और ट्री स्टेबल रहे। देन उनको रियलाइज हुआ कि उनका जो ओनर था वो इंटेंशनली ये क्यों करता था, बिकॉज उसको पता था कि फ्यूचर में कभी ना कभी आंधी आएगी, स्टॉर्म आएगा। एंड अगर ये कंफर्टेबल जोन में रहे मेरे प्लांट्स तो वो टूट के गिर जाएंगे। तो जब उनको वो आके शेक करता था तो उनकी रूट्स हल्की हल्की डैमेज होती थी। और उसको दोबारा से मेंटेन करने के लिए उनको, प्लांट्स को, अपनी रूट्स को और डीप सॉइल में जाना पड़ता था। तो उन्हें वो प्रैक्टिस हुई थी और ज्यादा स्ट्रांगली अर्थ से अटैच होने की। लाइक वी गो टू अ जिम, तो हम मसल्स बनाते हैं तो वो कैसे पहले स्ट्रेच होती हैं देन बिल्ड होती है। इन द सेम वे वो जो रूट्स थी वो बार बार स्ट्रेच होने की वजह से, पेन की वजह से और स्ट्रांगली बिल्ड होती थी नेक्स्ट टाइम। तो देन उन प्लांट्स को पता चला कि एक्चुअली वो हमें पेन नहीं दे रहा था, ही इज प्रिपेयरिंग अस फॉर द फ्यूचर विच वुड बी टफर। इन द सेम वे, जो आपके रिलेटिव्स हैं, जो आपके फैमिली मेंबर्स हैं, जो आपके फ्रेंड्स हैं, जो आपको अगर ऐसा बोलते हैं बार बार आके कि पढ़ लो, इट्स बेनिफिट फॉर योर फ्यूचर, आपको ट्रबल करते हैं, आपको पढ़ने के लिए बार बार सुनाते भी हैं, सो इट हैपेंस कि हमें लगता है ये हमें क्यों परेशान कर रहे हैं, वाई दे आर आस्किंग अस टू रीड अगेन एंड अगेन। सो टेक्निकली दे आर नॉट टॉर्चरिंग यू, दे आर एक्चुअली हेल्पिंग यू, कि आप उनके कहने की वजह से और पढ़ो, आप अपने उनकी वजह से और बेटर प्रिपरेशन करो, जिससे कि फ्यूचर में जो प्रॉब्लम आएंगी, इंटर के बाद फाइनल आएगा, व्हाट जनरली आई नोटिस, जब बच्चे फाउंडेशन के एग्जाम देते हैं तो बहुत इजीली काफी बच्चों का एग्जाम निकल जाता है, एंड दे एक्सपेक्टेड कि इंटर भी इतना इजी होगा, और इंटर वालों को लगता है फाइनल भी उतना इजी होगा। नो, इट इज डिफिकल्ट। जब फाउंडेशन में आप पास होके ओवर कॉन्फिडेंट होते हो, और अगर आपके पेरेंट्स, आपके टीचर, आपके गार्जियन, आपके रिलेटिव्स, आपके फ्रेंड्स कहते हैं कि बेटा और मेहनत करनी पड़ेगी, वो फाउंडेशन था, ये इंटर है, तो मे बी हमें कई बार ऐसा लगता है कि दे आर जस्ट ट्रबलिंग अस। इट्स नॉट, दे आर जस्ट प्रिपेयरिंग यू फॉर फ्यूचर। तो उनसे इरिटेट होने की जरूरत नहीं है। यू शुड कंसिडर एज योर वेल विशर। जो आपसे ऐसे कहता है ना कोई नहीं आराम से हो जाएगा, सीए इंटर, सीए फाइनल इजीली हो जाता है, अरे कुछ मत पढ़ो, दे आर वेरी डेंजरस फॉर यू। तो अगर किसी की बातें आपको बुरा लग रही हैं, किसी की बातों की वजह से आपको परेशानी हो रही है, एंड आपको ये समझ आ रहा है वो आपके बेनिफिट के लिए बातें बोल रहा है वो वाली, कि पढ़ लो, इट वुड बी गुड फॉर योर फ्यूचर, then please understand they are your well wisher. Do not get irritated. अगर कभी एग्जाम में भी ऐसा होता है कि हमारा कोई अटेम्प्ट में मिस हो जाता है और हम अनसक्सेसफुल हो जाते हैं, तो दैट्स अ टाइम टू मेक योर रूट्स स्ट्रोंगर। रिवीजन करने की तैयारी कीजिए और क्वेश्चंस की प्रैक्टिस कीजिए, सो आप उन अनसक्सेसफुल इवेंट से भी समझिए कि दैट इज फॉर योर फ्यूचर प्रिपरेशन, यू कैन डू बेटर। तो अनसक्सेसफुल होना या कोई चैप्टर समझ नहीं आना या कोई सब्जेक्ट समझ नहीं आ रहा है, देन गो फॉर मोर प्रैक्टिस, और प्रैक्टिस करो और रिवीजन करो, so that will make your roots stronger, and once your root is stronger you will be very strong and you can face anything. सो फॉर एग्जामिनेशन पर्पस अगर कोई कह रहा है कि और प्रैक्टिस कर लो और मेहनत कर लो, इफ यू फील कि आपका कोई सब्जेक्ट वीक है, कोई चैप्टर वीक है, देन गो फॉर मोर प्रैक्टिस, मोर रिवीजन। And even if you are not successful in any event, do not feel that you are weak. This is a time to make your roots more stronger, more revision time, give more to your studies, and that will result in your future in which you can clear the examination easily. So that was the story for all of you. Is there any query? Let me see. Neeraj is saying tomorrow is last class of that. So what is said in this? Shraddha is saying, so can you share brief notes from capital gain PGBP deduction? Let me tell you, Shraddha, there is no brief notes. You have to go through comprehensive studies. You do not go for selected studies. You have to go for full and final. So do not think about brief noting, etc. That will definitely going to make you in a problem. Okay, next is we have to be patient and bear it the struggle. Yes, your struggle makes you strong. So someone demotivate you, can't clear, how should answer them? Ignore them. The best way to ignore them. Because if somebody does not know about your struggle, then you don't need to listen them. I will have a story for that purpose also. Tomorrow we will discuss that kind of story. But let me tell you, there are people and only those person will demotivate you. Either they are not your well-wisher or either they do not know the CA, what is CA course is all about. They will say अरे तुमसे नहीं होगा, because उन्होंने तो किया ही नहीं। तो जब उन्होंने कभी CA अटेम्प्ट ही नहीं किया, उन्होंने तो फाउंडेशन भी नहीं किया, then how you can trust to a person who is actually not gone through with that process? तो अगर कोई खुद ही प्लेन उड़ाना नहीं जानता है, then how he will teach you to become a pilot? So ignore them, that's the best way. You cannot argue them, that is impossible, just ignore them. Next is, thank you, thank you, thank you. Story was reflecting perspective. Thank you, thank you. Okay. Okay, so I don't see any query from chat box, so Mr. Nisar, can we close the session? निसर जी कहाँ चले गए? वापस से कॉल करना पड़ेगा। निसर, are you there? Should I call? I guess call. Okay, okay, निसर जी, close the session. निसर जी, हो गया।